Joining us now is Kathy Jones, Chief Fixed Income Strategist at Schwab Centre for Financial Research. Thanks so much for joining us for this Monday, Kathy. So obviously we're tracking these developments around the potential for this end to the government shutdown. Now, what are you seeing as far as the reaction in fixed income today?
Well, we're starting to see yields move up a little bit because, ending the shutdown means you pick up in economic activity. Some of the things that haven't been available to do will now be available to do, and such as flying, without having to worry too much over the Thanksgiving holiday. So I think that also gets workers back to work and gets their paychecks flowing again. So the prospect is for a little bit of a pop in growth that might not have otherwise occurred. So I'm starting to see yields move up a little bit.
Right, so I'm just looking at the 10-year, the benchmark at 410 right now. It seemed to be a bit of a push and pull scenario last week. I mean, all in all, weekly performance, it kind of feels like we're unchanged here, but we saw everything from 408 to 416 last week with respect to, that tug of war between the good data, the bad data, the dovish comments, the hawkish comments. So what do you think is next now? Where do we go from here? And particularly if we do get the end to the government shutdown and we start to get this deluge of official data?
Yeah, I think we'll have to take the early data points with a bit of a grain of salt because they haven't been out gathering the data. And if they rush to sort of pull it together in an incomplete fashion, they'll have to be a little bit cautious about what it means. But I do think the market is going to be in this push-pull scenario for a while until we get some clear-cut indication either that inflation is going to come down and that opens the doors to some more Fed rate cuts and it eases some of the upward pressure at the long end of the curve, or it's not coming down and, job growth maybe firms up a little bit, and that means the Fed's on hold longer. We're in the camp that says that we don't expect a rate cut in December. We think the decision on where to go on rates will be pushed into the first quarter when the Fed gets more data. And again, because inflation is sticking near that 3% area, I think most of the folks at the Fed want to be confident it's going to come down before initiating further rate cuts.
Okay, so they're perhaps likely, as far as you're concerned, and the team over there, to sit on their hands come December. Maybe just not enough information before that decision for us, and particularly if we get the shutdown this week and we start to get some data subsequently after that. Let's see what happens. I mean, the markets seem to be still looking towards that December cut, but they might have to wait and take a cautious approach. Where else are you seeing opportunity here in credit markets right now?
Yeah, the credit markets, spreads are very tight. The yield you get versus treasuries in the investment grade and in the high yield markets, pretty small, pretty low. And so with those spreads very tight, we still think the fundamentals for the investment grade part of the market are very good. And that's an opportunity with yields where they are to continue to lock in some of that income flow for the next, say, 5 to 10 years. So we like intermediate term. We like tips because, we think that they're priced in such a way that you can get a positive real return, likely over time. So for people concerned about inflation, I think tips make a lot of sense. Mortgage-backed securities, those look good. They give you essentially the same government backing as treasuries with a higher yield. So that's an area to consider as well for a pickup in yield. And then, one of our favorites continues to be municipal bonds, especially for people in high tax states and high tax brackets. Those tax equivalent yields are very attractive, and the credit quality is very high, generally speaking, in the investment grade muni market.
All right, Kathy Jones, always appreciate it. Thank you so much for joining me on this Monday. Chief Fixed Income Strategist at the Schwab Centre for Financial Research, joining me there.